Hello everyone, we are the Group 7 reporters and we will discuss the equity management together with my group mates, Khatemorren April Fernandez, yours truly Divina Manatad, Vanessa Reuyan, Mylene Grace Piñon, and Jonahlyn Sayo. So what is equity management? Equity management, or also called as equity asset management, it is a financial strategy or process that involves the efficient and effective management of investment in stocks or equity securities. Also, equity management is the process of creating and managing ownership in your company. It involves tracking and reporting changes in ownership on your cap table, updating equity documents like your stock option plan and stock purchase agreements. Next is what is equity securities? Equity securities represents ownership stakes in a company, and equity management is all about making informed decisions to maximize the return on those investments while managing associated risk. Equity securities are financial assets that represent ownership of a corporation. The most prevalent type of equity security is common stock. Next is stock registration. What is stock registration? Stock registration refers to the process by which securities such as stocks, bonds, or other financial instruments are registered in the name of the actual owner or in the name of a nominee. The purpose of the stock register database is to keep a record of the history of a company's security base. Registration, or the Form S1. This form is the default registration form to be used if no other registration forms or exemptions from registration such as would be applicable under regulations A or D are applicable. So there are 17 main informational contents of the Form S1. These are the 17 main informational contents of Form S1. First is the forepart of the registration statement. In this portion, the company name, the title, and the amount of securities to be registered and their offering price are included and should be stated in the form. Also, describe the market for the securities, and our cross-reference to the risk factors section include a legend stating that the SEC has not approved or disapproved of the securities, and then identify the underwriters and state the nature of the underwriting arrangement. Next is the summary information. Summary information provide a summary of the prospectus contents that contains a brief overview of the key aspects of the offering as well as contact information for the company's principal executive offices. Next is the risk factors. In risk factors, you should discuss the most significant factors that can make the offering speculative or risky and explain how the risk affects the company or the securities being offered. Next is the ratio of earnings to fixed charges. In ratio of earnings to fixed charges, if the registration is for debt securities, then show a ratio of earnings to fixed charges. If the registration is for preferred equity securities, then show the ratio of combined fixed charges and preference dividends to earnings. These ratios must be shown for the past 5 years and the latest interim period. Next is the use of proceed. Using a proceed, you should state the principal purpose for which proceeds from the offering are intended. Next is the determination of offering price. In determining an offering price, you should describe the factors considered in determining the offering price, both for common equity and for warrants, rights, and convertible securities. Next is the dilution. In dilution, you should disclose the net tangible book value per share before and after the distribution, the amount of change in net tangible book value per share attributable to the cash payments and made by purchasers of the shares being offered, and the amount of the immediate dilution from the public offering price. Next is the selling security holders. In selling security holders, for those securities being sold for the account of another security holder, name each security holder as well as each person's relationship with the company within the past 3 years. and the before and after ownership percentage of each security holder. Next is plan of distribution. When planning of distribution for securities offered through an underwriter, you should name all underwriters involved and what are the relationship with offering. Also outline the plan of distribution for any securities to be registered that are offered otherwise than through underwriters. Next is the description of securities to be registered. For equity securities, you should state the title of the security and related rights, such as voting rights, liquidation rights, dividend rights, and terms of conversion. For debt securities, state their title, principal amount being offered, terms such as maturity interest, conversion, amortization, and so on. The description should also address lines, rights, subordination, operational and financing restriction, default events, warrants, and so forth. Next is the interest of name, expert, and counsel. You should identify an expert and counsel that are certifying or preparing the registration document or providing a supporting valuation and the nature of their compensation relating to the registration. This can be excluded if their compensation does not exceed $50,000. Next is the information with respect to the registrant. In this section, you should compromise the bulk of the document, include a description of the business, its property, any legal proceeding, and the market price of the company's stock, financial statements, selected financial data, and management discussion and analysis of the company's financial condition and its result of operation. It also requires disclosure of any disagreements with the company's auditors, market risk analysis, and several ownership and governance issues. Next is the material changes. In material changes, you should describe the material changes that have occurred since the company's last filed annual or quarterly report. Next is the other expenses of issuance and distribution. You should itemize the expenses incurred in connection with the issuance and distribution of the securities to be registered other than underwriting discounts and commission. Next is the indemnification of directors and officers. You should note the effect of any arrangements under which the company's directors and officers are insured or indemnified against liability. Next, the recent sales of unregistered securities. In recent sales of unregistered securities, you should identify all unregistered securities sold by the company within the past 3 years, including the names of the principal underwriters, consideration received, and the type of exemption from registration claim. Also state the use of proceeds from registered securities until all proceeds have been applied or the offering is terminated. Lastly, the exhibits and financial statement schedules. Provide exhibits with a related index for such items as the underwriting agreement consents and powers of attorney. A table showing the complete list of possible exhibits is noted in item 601 of Regulation SK. So those are the 17 main informational contents of Form S1.
Good day, everyone. I am Vanessa Reuyan, the second reporter of Chapter 7. So first, let's talk about Form S3. So ang Form S3 allows and incorporate a large company amount of information into the form by reference, which is generally not allowed in a Form S1. Ang Form S3 kay usa ka regulatory filing nga mo-provide og simplified reporting for issuers of registered securities. Ang Form S3 na ay duha ka part. Ang first part niya kay mao ang prospectus. Then naa didto ang summary risk factor section, ang management discussion and analysis, and selected financial data nga mao'y pinaka most important disclosure sa part 1. So, ang summary na contains og brief description sa issuer's business operation and na-include sa Part 1 sa Form S3 ang tables of issuer's income statement, ang balance sheet, and pro forma financial information. So ang part 2 na contains og supplemental information that the SEC does not require the issuer to disclose. This could include expenses the issuer incurred to conduct the offering, recent private placement of securities, and additional financial information. Ma-utilize ni siya when a company wishes to raise capital. Usually mahitabo sa secondary offering after an initial public offering has already occurred. So in order to utilize the simplified process, firms must first meet the certain set of eligibility criteria. So mauni siya ang certain set of eligibility criteria sa Form S3. The Form S3 is restricted to those companies that meet the following eligibility requirements. So first is it is organized within and has principal business operation the United States. It already has a class of registered securities or has been meeting its periodic reporting requirements to the SEC for at least the past 12 months, and it cannot have failed to pay dividends, sinking funds installments, or defaulted on scheduled debt or lease payments since the end of the last fiscal year. Next is the aggregate market value of the common equity held by non-affiliates of the company is at least 75 million US dollar. So, another is if a company has an aggregate market value of common equity held by non-affiliates or less than 75 million, it can still use the Form S3 provided that the aggregate market value of securities sold by the company during the 12 months prior to the Form S refiling is no more than one-third of the aggregate market value of the voting and non-voting common equity held by its non-affiliated investors. And it is not a shell company and has not been one for the past 12 months, and it has at least one class of common equity securities listed on the National Securities Exchange. So clearly, the eligibility requirements of Form S3 restrict its use to the larger public companies. Smaller nano-cap firms must search for a registration exemption, such as is provided by Regulation A and D. So next is shelf registration. So shelf registration is the registration of a new issues of securities that can be filled with the SEC up to 3 years in advance of the actual distribution of such securities. This allows a company to obtain funds quickly when needed, rather than compiling a registration document and then waiting for the SEC to declare the registration effective. It is especially useful for debt offerings since a public company can wait for interest rates to decline before using any securities. So kaning shelf registration, usa ni siya ka type of public offering where certain issuers are allowed to offer and sell securities to the public without a separate prospectus for each act of offering and without the issue of further prospectus. Usa po ni siya ka procedure gamiton sa mga publicly trade companies to leverage on good market conditions to trade their securities, especially when the current market conditions are not favorable. So next is declaring a registration statement effective. A registration statement is reviewed by the SEC staff, and if they find that it conforms the SEC regulation and clearly states key information about the company, then they declared it effective. Once declared effective, either the company or those investors on whose behalf it is registering the securities can initiate selling activities. So sa pag-file nimo sa shelf registration, the letter begins with the following boilerplate comments. So mag-start jud ang letter nimo og, we have reviewed your filing and have the following comments. Where indicated, we think you should revise your document in response to these comments. If you disagree, we will consider your explanation as to why our comment is inapplicable or a revision is unnecessary. Please be as detailed as necessary in your explanation in some of our comments. We may ask you to provide with supplemental information so we may better understand your disclosure. After viewing this information, we may or may not raise additional question. So pwede po ang imong letter Sa pag-file, mag-start po og please understand that the purpose of our review process is to assist you in your compliance with the applicable disclosure requirements and to enhance the overall disclosure of your filing. So mo rin ni siya ang kanang suggested nga format nimo sa imong letter sa pag-file nimo sa self-registration. So that
Good afternoon, everyone. I am Mylene Piñon, and today I will be discussing to you about exemptions of stock registration. So it includes Regulation A exemption and Regulation D exemption. In Regulation A exemption, let us discuss first Regulation A exemption. So, it is an exemption from the securities registration requirements of the Securities Act of 1933 on the grounds that the smaller securities does not warrant registration. So, when we say security, it is something that is given, deposited, or serving as a means to ensure the fulfillment of an obligation. So in short, securities are those nga atong gihatag to secure nga mabayaran ang isa ka obligation, or definitely here in our discussion it talks about security para mabayaran ng isa ka stock registration. So here in Regulation A says that smaller securities does not need registration. So it's according to Securities Act of 1933. Next, it allows exemption from registration if the offering is no longer than $5 million in aggregate year. So, if ang sa ka-registration gani, malapas na siya og 5 million, then it is not considered as smaller securities, but it is already a larger securities. So, dapat i-register na yun na siya. But if it is smaller or less than $5 million, then definitely dili siya needed nga i-register nimo siya nga securities. Then offerings still require the SEC to review an offering statement and confirm that the offering is qualified, which is different from approved. So SEC or the SEC or the Securities and Exchange Commissions, sila mag-review if ang imong registration is qualified ba siya. So, when we say qualified and approved, there are two different things, because when we say qualified, meanings pasok ka na sa tanan nga qualifications, but when we say approved, it depends on someone nga mo-approve ana. So, it depends on SEC if ang kanay mong qualifications i-approve ba na niya. But as for Regulation A, it only says about to confirm that the offering is qualified. There are two offerings that Regulation A offers. First is Tier 1 offerings and then Tier 2 offerings. So in Tier 1, it allows the issuer to receive up to $20 million in investments per 12-month period and allow investment from general public. It requires the issuer to file and receive qualification for its offering from state securities regulators in every state in which they raise funds, and then it is more useful for local projects. So in Tier 1 offerings, maka-receive ang mga investors og 20 million sa ilang gi-invest from a 12-month period. So from these investments, it can be from general public nga mga investments. So most of these offering are for local projects or public use. So definitely it seeks to raise funds. Next is Tier 2 offerings. So Tier 2 requires the submission of a few annual forms and that the issuer's financial statements be audited. It does not require filing offering statements with state-level regulators, and it is suitable for large-scale projects. So it is for large-scale projects and requires annual forms and financial statements to be audited. Because of this, it does not require filing. So, mora na siya ang key points sa Tier 2 offerings. Next is Regulation D exemptions. So, it is under the Securities Act, provides a number of exemptions from the registration requirements, allowing some companies to offer and sell their securities without having to register the offering with the SEC. Exempts some companies from the registration requirements associated with a public offering. It gives smaller companies access to investment capital by letting them offer specific types of private placements. So it allows companies to sell their securities without registering it. So without, so dili siya need nga i-register siya sa SEC, especially to those companies nga na public offering. So dili siya need nga i-register sa SEC because it is for public offering, which helps smaller companies nga maka-gain og capital through offering private placements. So in determining kinsay under ani nga registration, we also need to understand those accredited investors. So accredited investors, they are the one nga allowed to invest in securities but not registered sa SEC. So there are the one nga allowed pero wala siya naka-register sa SEC. So when we say accredited, they are recognized or authorized, or they are allowed. So accredited investors, one to whom the issuing company reasonably believes falls within any of these categories at the time of the securities sale. So first is a bank, broker, a dealer, insurance company, investment company, or employee benefit plan. Second is a director, executive officer, or a general partner of the issuing company. And the third are those person having individual income exceeding $200,000, or katong mga tao nga naay income mga $200,000, or joint income with a spouse. So na siya asawa exceeding $300,000 ang ilaha nga income in each nila nasa like $300,000 of the last 2 years, from the last 2 years, with a reasonable expectation for reaching the same income level in the current year. So that's it for the regulations.
Hello everyone, I'm Khatemorren Fernandez, and I will discuss the accounting principles related to stock transactions, how par value is accounted for, how additional paid and capital is calculated, and how certain costs are treated in the process of issuing stock, and how to handle warrants attached to debt instruments depending on their separability. So, accounting of stock sales. Most type of stock contain a par value, which is a minimum price below in which the stock cannot be sold. It is to ensure that a residual amount of funding was contributed to the company and which could not be removed from it until the dissolution of the corporate entity. So a par value is a minimum price set for a company's stock in which it cannot be sold. So it was meant to ensure that a minimum amount of capital was contributed to the company and could it be withdrawn until the company is dissolved. So in reality man good, most common stock now has a par value that is so low, typically anywhere from a penny to $1, and its original intent is no longer works anymore. And the accountant still tracks par value separately in the accounting records. So let's say an investor buys a share of stock at a price higher than its par value, and the difference is recorded as additional paid in capital. So for example, if an investor buys one share of common stock at a price of $82 and the stock par value is $1, then the entry would be cash is $82, which is in debit. Common stock par value is $1, which is in credit. Common stock additional paid in capital is $1, which is in credit. And there are costs associated with stock issuance. When a company issues stocks, there are costs involved, such as expenses for printing stock certificates, legal fees, banker fees, and security registration fees. And these costs can be deducted from the proceeds of stock sales rather than being recognized as expenses in the current accounting period. And next, the fair market value of warrant. If the warrant attached to a debt instrument cannot be detached and sold separately from a debt, then it should not be separately accounted for. So, if a warrant, which is essentially an option to buy more stock, is attached to a debt instrument and cannot be separated and sold independently, so it should not be accounted for separately. But if the warrant can be sold separately, the fair market value of both the warrant and the debt instrument should be determined. Then, the total amount received for selling both items should be divided between them based on their fair market values. So for example, If the fair market value of a warrant is $63.50 and the fair market value of a bond to which it was attached is $950 and the price at which the two items were sold was $1,005, then the entry should be made to additional paid and capital account for $62.97 to account for the warrants, while the remaining $942.03 is accounted for as debt. So these examples deals with a situation where a warrant is attached to a bond and both are sold together for a combined price of $1,005, and the apportionment of the sales is calculated as follows. So using the allocation formula, fair market value of warrant divided by fair market value of warrant plus fair market value of bond multiplied by price of combined instruments. So as you can see in the given, the fair market value of warrant is $63.50, the fair market value of bond is $950, and the price of combined instrument is $1,005. So we will just substitute it. $63.50 divided by $63.50 plus $950 and multiplied by $1,005, and result we get $62.97. So the entry records $62.97 in additional paid in capital account to account for the value of the warrant, and the remaining $942.03 is accounted for as debt. And next, if a warrant expires, then the funds are shifted from the outstanding warrants accounts to an additional paid in capital account. So to continue with the last example, this would require the following entry. Additional paid in capital warrants is $62.97, which is in debit, and additional paid in capital expired warrants is $62.97, which is in credit. So this entry essentially transferred the funds associated with the expired warrant from one equity account to another. And next, if a warrant is subsequently used to purchase a share of stocks, then the value allocated to the warrant in the accounting record should be shifted to the common stock accounts. To use the preceding example, if the warrant value at $62.97 is used to purchase a share of common stock at the price of $10, and the common stock has a par value of $25, then the par value account is credited with $25 since it is mandatory that the par value be recorded, and the remaining of funds are recorded in the additional paid in capital account. The entry is as follows. So cash is $10, which is in debit. Additional paid in capital warrants $62.97, which is in debit as well. Common stock par value is $25, which is in credit, and common stock additional paid in capital is $47.97. So $47.97 is the remaining funds of the cash additional paid in capital warrants. So we get it by adding the cash and additional paid in capital warrants and subtracting by the common stock par value, and we get $47.97. So this entry reflects that $25 goes to the common stock par value account, which is mandatory, and the remaining $47.97 is added to the additional paid in capital account. So, the example that I have discussed earlier, it deals with the allocation of funds that is related to warrant, whether they are initially allocated, expired, or are used to purchase a common stock. And the entries ensures that the company financial records accurately reflect those transactions and their impact on equity accounts. And now, let's proceed to the equity-related control. There are a number of controls that should be used during the process of selling equity to the investment community. The following controls are listed in sequential order from the start of the equity offering. Those applying primarily to the specific registration document or exemption are so noted. So, there are 4 general stock sales controls. First is verify available authorized shares. So there must be a sufficient number of authorized and unused shares available for distribution, which can be determined by comparing the authorized number of shares listed in the articles of incorporation to the share total reported by the company's stock transfer agent. And second, verify board authorization. The board minutes should reflect the approval of stock offering that includes the minimum and maximum allowed amounts of funding and the approximate terms of the offering. Third, have a due diligence officer review all SAC filings, because the SAC can and will reject any registration documents if information is not presented exactly in accordance with its instructions. So to avoid the delay of SAC rejections, have a due diligence officer who specializes in SAC's procedures review the filings prior to submission to avoid SAC rejections. And fourth, verify contents of security authorization letter. The next step in the process is to authorize the issuance of shares to the new investors. The treasurer authorizes the issuance of shares to new investors by completing a form letter to the company's stock transfer agent, itemizing the number of shares to be issued to each investors and noting addresses and tax identification numbers. Corporate counsel should match all information on the authorization letter to the supporting document prior to approving the letter. There are also controls specific to Regulation A stock sales. First is review disqualification provisions. It really need to review disqualification provisions because the SAC can use several rules to disqualify a company's Regulation A offering. Corporate counsel should review these rules in advance to determine if the regulation can be used and advise the CEO if the offering can proceed. Second, submit the test the water documents to counsel. The company can issue the test the water documents to prospective investors, but only ones that follow specific SEC guidelines and which have been submitted to the SEC in advance. So to ensure that such documents meet SEC requirements, have a corporate counsel not only review them, but formally approve them and retain a copy of the approved version. And third, verify termination of the test the water documents. A formal offering cannot begin until at least 20 days after the test the water materials have been distributed. So, ensure that the distribution is terminated as of a specific date. And fourth, control release of offering circular. The preliminary offering circular cannot be released until the SAC qualify it. Corporate counsel should have control over the release so that there will be no premature distribution occurs. And fifth, submit advertising to counsel. The company can advertise the offering, but only include specific terminology in the advertisements. To ensure that the advertising meets SAC requirements, have a corporate counsel not only review it, but also formally approve it and retain a copy of the approved version. And six, specify an escrow cup. Regulation A does not allow for issuance of more than $5 million in aggregate per year, of which no more than $1.5 million can be a secondary offering. So to ensure that these limitations are not exceeded, expose a cap on the amount of funds to be accepted by the escrow, beyond which funds will be returned to investors. And 7. Update offering circular. The offering circular must be reissued if the material events occur during the offering period that would make the information in the circular false or misleading. A disclosure committee composed of at least the controller and the corporate counsel, and they should meet regularly during the offering period to determine if such changes should be made. And 8. Ensure that 2A is filled. At least one form of 2A must be filled within 6 months of the SAC qualifications of the offering statement. Responsibility for the filing lies with corporate counsel, who should note the due date on the checklist of activities associated with the funding. And there are also controls specific to Regulation D stock sales. First, review outgoing subscription agreement. There is a possibility that the variation subscription agreement will be sent to different prospective investors. So to avoid this, create a master term sheet and have the CEO initial it. All subscription agreement must be compared to this master term sheet prior to being issued. Better yet, have a corporate counsel initial every subscription agreement before it is issued and retain a copy as a proof of the issued terms. And second, review received subscription agreement. It is possible that an investor might fraudulently modify the terms of the subscription agreement. So to guard against this, compare the retained copy of the issued subscription agreement to the one returned by each investor. And third, review investor qualification certificate. The company must be able to prove that it has received sufficient assurances from its investors that they are accredited investors. Accordingly, corporate counsel should verify that a signed investor qualification certificate has been received from each investor and it has been properly completed. And fourth, verify cash receipt. An investor may submit signed documents indicating that he is investing, but not transfer funds to the escrow agent. So, to detect this, request verification of cash receipt from an escrow agent and match the amount received to the amounts indicated in the signed subscription agreements. And fifth, ensure that Form D is filled. The Form D must be filled within 15 days of the receipt of funds from escrow account. Responsibility for the filing lies with the corporate counsel, who should note the due date on the checklist of the activities associated with the funding. Counsel must also obtain the signature of the Chief Executive Officer on the Form D and retain a copy of the completed form in the storage. A subsequent audit can also verify that this task has been completed in a timely manner.
So, good day everyone. I am Jonahlyn Sayo, and today I'm going to talk about equity related policy. So, this policy described in this section apply to a company's use in the regulation A or D exemption, and so are only needed if the treasurer expect to issue stocks either exemption. So, policies is specific to regulation A stock sales. The policy. The company shall require all directors, officers, and shareholders owning at least 10% of any class of company securities to complete and sign violations questionnaire that fully describe any eviction, court order, or and organizational suspension to which they are subjected. So, for example, in this policy, is in a straightforward terms, the company mandates all directors, officers, and shareholder nga na ay minimum nga 10% sa pagpanig-iya sa mga securities sa kumpanya to fill out a violation questionnaire detailing any criminal convictions, court order, or business suspension they may be subjected to. Next, if there is a material change to the information initially submitted on the violation questionnaire, then the submitting party shall promptly notify corporate counsel of the change. So, for example, if there is an important change to data nga gihatag sa violation, the person submitted it should quickly inform the corporate legal team about that change. All securities solicitation must approve in advance and in writing by corporate counsel. So, in this policy, in line with the policy, any request for securities solicitation must receive pre-approval in writing form, in writing from in writing from kanang sa corporate counsel. So, unsa din ang corporate counsel? Corporate counsel is usa na siya ka abogado nga nagtrabaho sa usa ka business or sa organization. Next. So, policy. In this policy, the company shall not issue unregistered securities without first obtaining a signed statement from each prospective investor, clearing stating that individual or entity status such an accredited investor. So for this, for example, sa dili pa ang security, so dili pa ang mga security, so like stocks, bonds, and notes can be offered to the public pero kinahanglan nga ma-registered with the Securities and Exchange Commission. Any stocks does not have an effective registration statement on file sa Securities Exchange Commission is considered unregistered. So, unsa rin Securities and Exchange Commission. So, this is the organization that oversees the accounting practice. Policy specific to regulation D tax cells. So, regulation D is the sales of unregistered securities can only be to accredited investor. The company must take responsible step to be assured that the prospective investors is needed an accredited investor. So, isa din ang accredited investor. So, ang accredited investor is an individual or business entity nga gi-allow sa pagpamaligya sa securities that maybe that may not be kanang registered with sa financial authorities. So, the policy is all unregistered securities issued by the company shall contain the following restrictive legend. So these securities have not been registered under the Securities Act of 1933. Is amended. So they may be not be sold, offered for sales, pledged, or hypothecated in the absence of registration statement and effect with respect to the securities under such act or an exemption from such registration requirements. This legend may only be modified the following recommendation of corporate counsel. So in this policy, so all unregistered securities by the company must include the prescribed restrictive legend. So kaning mga securities nga wala na registered under sa Securities Act of 1933, ingnon nga giusab. So they may be not be sold, offered for sales, gisaad or gihypothecated sa walay usa ka registration statement in kanang effect with respect to the securities under such as act or kanang exemption from such registration requirements. So next. The company shall not use any form of general solicitation to potential investor for the sales of unregistered securities. So this policy prohibit using broad marketing to attract potential investor for the sales of unregistered securities. So next, all security solicitation must be approved in advance and in writing by corporate counsel. So this approval shall include a description of the solicitation, a simple marketing materials. So in this policy requires all securities solicitation to receive prior written approval from the corporate counsel, such as must be include uh, such approval must include a description of a kanang solicitation as well as kanang a simple market a simple marketing materials.
Now here we go to equity related procedures. So we will discussing about describing the process flow to a stock sale under Regulation A exemption and describing a sale under Regulation D exemption. So for Regulation A, we have to discuss the purpose and its scope. So this procedure is used primarily by corporate counsel. So when we say corporate counsel, they are the lawyer that works only for a single business or organization. So sila mga lawyers. So its purpose is kani sila is mo verify sila that the company will not be disqualified. They file also notices with the SSC or Security of Exchange Commission, and then they will issue the shares to the investors. So next is the procedures on Regulation A exemption. So Regulation A exemptions procedure is first is disqualification investigation. So it is performed by corporate counsel. So first step is corporate counsel reviews the disqualification provisions of Regulation A. So magbase siya from what we previously discussed about Regulation A exemption. Then next step is to corporate counsel distributes a questionnaire. So iyang i-distribute ang mga questionnaire dito sa mga possible investors. Next is legal requirements review. So it is also performed by corporate counsel. So the first step for this is the counsel verifies sufficient number of authorized shares available. So ilahang i-check if pila ang number of authorized shares nga pwede nga makuha. Next is counsel verifies that the board of directors has authorized the issuance of securities under Regulation A. So ilang i-identify or verify if ang board of directors ba ni agree ba nga i-issue ni nga mga securities nga available sa Regulation A. Next step is the SSC review or the SEC review. So from the word itself, SEC review, so ang mag-perform ani is SEC and the corporate counsel. So first step ani is submit the test waters documents, scripts for broadcast releases, and counsel for prior approval. So when we say test waters, these are the sample documents presented nga to be approved. So next is counsel submits the test the waters documents to the SEC and then authorizes the releases to the investment community. So isubmit nila sa SEC and i-release sa investment community. Next step is the council determines the final date upon which the test the waters documents are issued to the investment community and then authorizes the termination of such distributor. So they will determine the final date and mag-authorize kung kinsa nga mga distributors ang or kung kinsa ang mga distributors sa shares or investments ang possible nga ma-terminate depende sa test the waters documents nga gi-approve or wala gi-approve. Next is council reviews and approves the preliminary offering circular saw and submit it to the SEC for qualification using 41A, and then the council responds to all SEC comment letters relating to the preliminary offering circular. The next is council determines the number of days that have passed since the last test the waters document delivery are broadcast. So once gani nga 20 days na ang nipass, council authorizes commencement of a general solicitation. So when we say general solicitation, these are advertisements or the final offering for securities. So next is SEC review. Council pre-approve and retains a copy of all under advertising used as a part of general solicitation. So ilahang i-keep, council will keep that copies and then para gamiton sa advertising. So fourth step is to collect funds. So it is performed by the council and the treasurer. So the council specifies an escrow cup once received. So when we say escrow cup, there are the one um, escrow cup are the one nga mga bonds or mga financial agreement that is amount to or the amount is equal to $2,200,000. So it specifies all the financial agreement. So specify sa council ang mga financial agreement or what we call the escrow cub. So escrow agent wires all funds to the designated corporate account. So i-distribute sa mga escrow agent ang funds sa designated nga corporate account. Then once completed, council creates a security authorization letter for the stock transfer agent. Here we go now to Regulation D. So we will talk all about its purpose and scope and its procedure. So the same with Regulation A, it is also handled by a corporate council. So the role of the corporate council here in Regulation D is to file notices with the SEC or the Security and Exchange Commission. They are also the one preparing subscription agreements and investor qualification certificates. So when we say subscription agreements, these are the formal agreement between a company and an investor to buy shares of a company at agreed upon price. So they're also the one to collect funds through an escrow account and authorize the issuance of shares to investors. So let's proceed to the procedures of Regulation D. So first procedure is legal requirements review. It is done by corporate counsel. So the first step to do is to verify sufficient number of authorized shares available. Next is to verify board of directors has authorized the issuance of Regulation D securities. So it is almost the same to Regulation 8 to find sufficient number of authorized shares available and to verify if the board of directors authorized the issuance. Next is document preparation. So it is also done by the corporate council. So the corporate council will update subscription agreements. So as what I have said earlier, the subscription agreement are those formal agreement between a company and an investor to buy shares of the company. So next is the corporate council will update the investor qualification certificate and issue the documents to each prospective investor. So ilahang i-distribute ang tanang documents adto sa mga investors. Next is to collect funds. So here in this procedure, it involves two persons na. So it involves corporate counsel and treasurers. So the first step to do here in this procedure is upon the relief of the documents, verify with the escrow agent that all funds have been received. So i-identify if tanan bang funds nga na-distribute is na-receive ba sa escrow agent. So from this, there will be authorizing the transfer of funds and the escrow agent wires all funds. So i-distribute na sad sa escrow agent and then there will be the one to create security authorization letter for the stock transfer agent. And subsequent to SEC filings, corporate counsel, so the corporate counsel within 15 days of the initial receipt of funds must file a Form D with the SEC. So mag-file sila og SEC. So this form is a form of notices naman ni siya. So di ni siya registration but form of notices to be filed with the SEC. So the chief executive officer must manually sign this form prior to filing. So the last step to do is to retain the original copy to storage. So everything they will do is to retain the original copy. They have to keep it as their storage as for filings. So that's it for Regulation A and Regulation D, equity related controls.
So next, summary. Highly quality registration documents with Securities and Exchange Commission signify a well-managed company. Issuing such document requires in-depth knowledge of Security and Exchange Commission regulation and the guidance of experienced company counsel. Companies with expertise often prefer to move from Form S1 to Form S3 to avoid the complexities associated with preparing and defending Form S1. Filing under Regulation A involves less paperwork but has a limitation on the amount of funds raised along with the various compliance issues to monitor. The simplest alternative is the Regulation D offering executively targeting accredited investors. Next, the treasurer plays a significant role in stocks sales and should be well versed in various registration forms and exemptions and the necessary controls and procedures from completing stock sales.